Can let me know, is it, this is everything okay? You can just type on the private chat. Okay. Okay. So my colleague just texted me live. Okay. So Ken, maybe I need you to mute yourself. Okay. Okay. Thank you. Okay, Brian. Hi everyone, welcome to Speak Home Ringgit Hash Show. It's a very pleasure to see everyone's our friends, those who no matter you are the first time that who join our Speak Home Ringgit Hack Show or you came to our event for many times. Just want to say thank you for your support, guys. So today, right, is a public holiday, Thaipusam. So at here, I also want to wish all my Indians friends, yeah, or Hinduism friends. Yeah, sometimes we don't know. Yeah, people say it's like they are Hinduism, maybe they are not Indians. That is a possibility, right? Thank you so much for everyone's coming today. It's a holiday, we know that. So I hope you guys have a very peaceful and also a very enjoyable holiday time. So yeah, today, right? What the topic that we're going to talk about is and also a very so today we are going to talk about market outlook 2022. Okay, our speakers Mr. Wong Wai Ken, he's from StashAway, country manager from StashAway. So later he will going to share with us what is the reason the most important things that we should be aware, or we should be pay more attention on it, so that we will know like how to make our the most accurate investment. Okay, so this is something that we know we are looking for something. So last year is a very volatile, I would say, in the no matter in the global market or local markets perspective. So there is a lot of different things happens. Okay, so definitely this year's, okay, this is something that a lot of the important things that we should be aware, such as is it the tech stocks going to maintain a bullish performance? Is it the Federal Reserve, the rate hike is finally they're going to start the rate hike circle? So and also what is the current the geopolitical things happen? So this is something that we always quite see in the market, right? In the locals media's report everything. So later you can just think about like what kind of questions that you want to ask. You can prepare that. And also after our speakers, Mr. Wong Wai Ken, finish his presentation, then we can just join in to be to have discussions. And don't forget, okay, to really important to subscribe our Speak Home Ringgit Hack Show. Yeah, and also really you need to prepare yourself. Okay, grab yourself coffee. Make sure you are really in a good shape to get this the most some insight from our today's speakers. Okay, guys. So from now, I'm going to play a couple of videos. 8:30, we will start this event on 8:30 sharps. Okay.
Hello, I am landlord. Hi, I am potential renter. And I am Speed Home. Wow, so cool. Editing only ma. Okay, so why should we use Speed Home? Why give me reason fast. I very busy. I got meeting with Dato later, you know. Well, let's start with you first. Oh, okay. I'm interested to rent this guy's property. So can I take a look first? Oi. I where got time to go show my 10 properties to everyone. I only want to see one lah. Oh, sorry. Which one out of my 10 properties you want to see? No worries, we can arrange for our home runner to go to any of your 10 properties and take photos and videos and even arrange home viewings for any potential renters like you. Or free. Free. Oh, okay. Then if I like the property, can I rent straight away? Whoa, wait. I need to know his background first, huh? After he no job cannot pay rent, how? Hey, you think I know money? Don't worry. we will do a complete background check to make sure the tenant is eligible and you get a qualified tenant. I don't mind, check lah. But how is the deposit? Is it 2 months? Yeah, the deposit. This one very important. After he damaged my property and ran away, how? Hey, you think all of us very bad, is it? You own 10 properties, then you know lah. Can you come closer a bit? I want to slap your face. Guys, there is no deposit. Huh? Wait, where can no deposit one? Simple. The tenant only needs to pass our zero deposit eligibility check and the landlord can sign up for the best insurance protection with Speed Home. Not bad no deposit. Wait, what insurance is this? It's Allianz Insurance that protects your right as a landlord. So just 1.5 months rental for the whole year and Speed Home guarantees on-time rental payment, protection against rental loss, plus utility and household coverage. Oh, how much is the total coverage? Up to 42,000 ringgit. Wow, not bad. I can get money back. That means I can relax at home and you count him everything. Count him everything. Sign me up now. Me too. Great. Any other questions? Got free gift we don't have any free gift. Can I give discount? Yeah, give free voucher lah. No free gift lah. But actually, you can advertise your property with us for free. And our insurance also has 60 days free cancellation. So no harm to try. Can I give free umbrella?
Okay, right now I'm going to play another video. Just a minute.
In my life, I work very hard. I take good care of my family, I have very good friends, and I pay my taxes. My life is pretty good. Interrupt my narration. Must be about my rental property. Hello, Megan. Oh, Megan. Hey, how's my property? Tenant run away. Got property damage. 40,000 to repair. Why I didn't have protection for my rental property? Darling. I am pregnant. Are you sure? Why got 5 red lines one? That means really confirm pregnant. Why I didn't use protection? Hey darling, you can't die yet. You don't have life insurance. Why I didn't buy more protection? It's okay, darling. Let's focus on the baby first. I hope it's a boy. You like? I'm too old for this. Darling! No! Become ghost already. And how come I'm wearing this shirt? I forgot to tell you about our sponsor today, Speed Home. So I know you already have insurance protection for your life, protection for your little brother, but why not have landlord insurance protection for your rentals with Speed Home? Get yourself covered when your tenants run away or when there's damage to your property. So make sure to check out Speed Home, okay? I go help my wife. Bye bye.
Okay, thank you so much for watching the video. So it seems that we still have 2 minutes. So I just want to try to understand our today's crowd. So guys, if you are the first time that will join our Speed Home event, can just type 1. If you are joining our events at more than multiple times, if you have already signed up to our Ringgit Hack Show for multiple times, can just type 2 or the numbers that you have joined so that we will know you are our old friends. Thank you so much, guys. So let's see. Did we have any old friends or new friends? Okay, guys. Also, in the meanwhile, right, today we are going to talk about the market outlook 2022. So if you are right now on our Facebook with us, can just help us to just share it out this stream so that your friends and your family also stand a chance to learn something from our today's speakers. Mr. Wong Wai Ken, he will gonna to share with us about the today's outlook. Okay, thank you so much. So okay, let me check. Is it there's any new friends? Okay, so guys, may I know, right? Any ones of you invest in stock market? So if you are invested in stock market, can just tell me, so just in the past years, right? What is the biggest learning from you for you in 2021? So if you want to share, you can just share, just type it out in the comments there lah, so that later that we can have a discussions on during the Q&A. Or if you have any questions already, can you just also prepare yourself a bit? So later on, when after our speakers, okay, Mr. Wong Wai Ken, he finish his presentations, then we will ask him to answer or just have opinions and sharing with you later on after he finish his presentations. So seems like now it's already 8:30. Without further ado, I'm going to invite today's our speakers, Mr. Wong Wai Ken, to came to the stage. Right, just give me a minute. Okay. Hi. Yeah. Ken, you haven't unmute yourself. Yes, Ken, just say hello to our.
Hi everyone.
Yeah. Good evening. So Ken, thank you for coming to be our speakers. I think this is the third time that you are coming to a Speak Home event. Thank you so much.
I lost count already. I knew this wasn't the first time, but I didn't know it was the third already. So maybe I'm
really
regular enough to come back on. So happy to be here.
Yeah. So just let me share your backgrounds to our audience today a bit. So actually, right, Mr. Wong Wai Ken actually is StashAway Malaysia country manager. So he have actually also a very experienced asset management. So he used to be an investment division in Khazanah National Berhad and also in the premium China funds manager in Australia. He have gained his capital's market experience at Affin Wong Capital, served in both its corporate strategy and also equity capital market departments with Affin Wong. So right now he's StashAway country manager. Those who's not familiar with StashAway is an online investment management company headquartered in Singapore. The company was founded in Singapore and he was the first robot advisor, but definitely then they have Ken, then later he will get different say on this lah. It's not only on the robot advisor, but they also have the others services. So long story short, StashAway also own and license practical license in Malaysia that granted by the security commissions. So yeah, long story short, Ken is a very experienced asset manager. So yeah, I can't wait to hear him what he's going to share with us later. So yeah, so Ken, I pass the stage to you.
Thank you, Bunya, for the introduction. And also, I want to say that your creative and marketing team did really well in terms of doing those two ads. Super funny. I'm sure they're quite new because last time I was on, I didn't see this before. I was hoping the second one, the guy managed to pull through, but unluckily he passed away for comedic effect, obviously, but quite funny. And I actually thought before he would go to the laptop to clear his browsing history, I thought he was going to buy insurance, but then turns out he was doing other things.
This is my checklist also. Actually, this is my bucket list also. If I got something that did happen to me, I'll put this in my will. Okay, anyone please help me clear my browser history.
Yeah, it was a very good way of reminding everyone how you need to be protected from many risks, right? You need to look at property damage, health insurance or term insurance, but you guys did it in such a funny way. So let's just get started. I think I'm also going to transition into my slides. So I think that's a very good way to kind of set things up, right? Because I think when we think sometimes about investments, we always think about reward, right? We don't really think about the risks, and the risks are there not to scare you, but it's really there as a reminder to ask yourself whether it's worth doing the investment or not, right? So if let's say you think something is quite risky, like let's say setting up a shop or buying an apartment or buying a stock, you should have a expectation in mind of how much you want to earn, right? And we'll be talking today about two main risks. One of the risks is mainly in the US around inflation, and then the second one will be about China. And then we'll talk about diversification at the end of the day, right? So, and then we'll take questions after that as well. So, I think before we start, right, I think I started talking about risk and return a little bit, right? So, when you invest at time, you should always understand what is the potential upside for yourself, right? So let's just walk through a real life situation where you pick a stock, right? So let's say you pick a stock, you think that this company will do quite well. Let's say this company is in oil and gas, right? So you think this company will do quite well because the COVID situation is improving. Countries are opening up, flights internationally and domestically will resume, and you think that because 2020 was a very bad year for oil, 2021 was a really good year for oil, maybe this year also can continue at least at the 80 ringgit, $80 per barrel mark, right? So you think it'll be a decent year for oil. So that's the kind of thinking on the upside. Maybe you think about new contracts, think about going into new countries, this company doing quite well. So then you need to think about the risks, right? So what are the risks to this company? So if you think about oil and how cyclical it is, you need to think about a few things. So the first is overall growth. Will growth in industry and in consumerism be high? If they are high, then obviously this company will do well. But if for some reason it doesn't, because maybe Omicron or new variants come about and we go back into semi-lockdown, then obviously it won't do so well. So my point is, whatever investments you make, don't be too scared of the risks, but you need to be aware of the risks, right? And when you have scares like COVID in 2020 and you see the markets go down very, very drastically, it's because those risks are not expected and those risks are not priced in. So whatever you see in the market, even though it may or may not be volatile, all the known risks are already factored in, right? Are already baked in. So when there's a real a surprise, that's really usually when there's a crisis, because it's a crisis because people are not prepared for it. So throughout this presentation where I talk about inflation and then China, I'll talk about how things in the economy link together as well. For example, how inflation relates to rates, how rates relate to investments or business or yourself. So I think you should, even if you're investing in stocks, you should understand how economies work, because at the end of the day, real businesses operate in the real world, and it's the real world where the economic situation will determine how well your business does or not. Okay, so I'm sure you're not alien to this latest risk, which is actually inflation concerns, right? There's just been so many headlines when it comes to inflation. I think by and large, a lot of headlines are alarmist, right? So when you read the Financial Times, Bloomberg, CNBC, or wherever you get your business news, usually headlines will be very alarmist. So when you read financial news, don't see it as, oh, they're trying to warn me against investing because it's a very troubling time. Instead, if you change your lens to say, oh, they are making me aware of the risks, let me actually read the headline, read the article, and then decide what I want to do with my portfolio. If your portfolio is let's say in a few stocks, then you need to decide how it affects those stocks and whether you want to sell or to buy. Or maybe it doesn't affect your portfolio at all. Maybe you are invested in property and inflation has very little to do with your property. Or even better, if you're already invested in gold, gold is a natural inflation hedge. Or if you're invested in maybe very risky things like tech or whatnot, the returns are higher than inflation, so you are more than compensated. Okay, so here are a few kind of headlines that I grabbed from Bloomberg and CNBC, and essentially, the real shock here is that inflation in the US was not a temporary thing. So all throughout 2021, the US Fed was saying that inflation was transitory, meaning it's going to be temporary. So we don't see any real motivation to raise rates. So that's the reason why now it's very obvious that all these inflation in depending on how you want to measure it, whether it's particular sectors or the overall number, all of it is very high. The Americans had a very expensive Christmas. So overall, inflation is not temporary, it's not transitory, and therefore the Fed has moved away from saying that this is going to be temporary, and they're probably going to look at raising rates already. So even though inflation is high and it might seem like like a very scary thing, right? Like a monster, right? Like, I don't think it's cause for you to panic, right? Like, I would say COVID, when we first heard about it in 2020, was a much bigger risk to investing than inflation, right? So this is just the latest thing to be concerned about, right? Because if it was not this, it would be other things as well. So say you put COVID aside, there was a lot of other things to be worried about in these last 3 years. There was things like Trump was in power, so there was a lot of geopolitical risk, US and China fighting. And then there was also a lot of risk around, we'll talk about China later, but China clamping down on the tech side of things, the tech industry. So inflation is just the latest thing that is a concern to a lot of investors, right? As you can see. And to what extent is it a concern? So first, I will kind of just show you the data, and then I will tell you how to interpret the data and whether you should feel scared about it or not. And I'll talk about some cause and effect and talk about rate hikes after this as well. So first, you will see that these spikes here are kind of very alarming, right? Like, you see this is going back, many decades. But then what we are experiencing here is like multi-decade highs, and this one is like higher in like almost like 25, 30, 40 years already. So this seems very high, but first and foremost, I will say that numbers at the face value sometimes might seem scary, but actually, if you know the context of the numbers, you can actually be a little bit more calm because you know the background. So basically, if you think about 2021, where COVID was around, there was probably very little inflation going on, and people were not consuming, prices were not rising. Maybe there was talks about some deflation, and then suddenly when things rise, they rose very quickly. You're talking about a low base effect, right? So when one year is, let's say, inflation is 1%, and then suddenly it goes from 1% to, like, let's say 3%, is like, oh my god, it's a 300% rise, right? Just an example, right? So you can see here it's like a 10% rise, so it's off of quite a low base, and overall, even though it is alarming, it may not be as alarming as you may think it is, right? So what caused the overall inflation? So obviously, COVID played a very big part of it. Different countries are feeling the effects of COVID in various degrees in various times. When China was at its worst, US was fine. And then when the virus was in Europe and US, China was recovering. And then when the US recovered, India was doing very badly. And then now that it's come down and there's a new variant out of South Africa, you see Europe, particularly countries which have reopened again, which are facing very, very high COVID numbers again. So you have all these kind of like waves, and it's happening in a very unpredictable way, whether it's the US, the Europe, or China, Southeast Asia. It affects global supply chains, right? So if you order an Apple product or a Xiaomi product, you're talking about many parts that come from places all around the world, right? So when you have semiconductors not being able to be shipped fast enough, things automatically become more expensive because there's not enough semiconductors to go around. So because of that, the supply chain is stuck, and ultimately prices get hiked, and that's why inflation is high. So if you go from cause to then effect, you see besides that also used car prices were up massively as well, because of the semiconductor shortage, a lot of which goes into cars. New cars couldn't be shipped. So people then wanted to buy old cars, and old cars went up 40-50%. So another interesting thing also was that a lot of the US consumers, despite thinking maybe during COVID they don't have money and all that, actually they do. They have a lot of money because stimulus checks was mailed out, and ultimately they used it to buy things because they couldn't go out to do, to restaurants or enjoy holidays and things like that. So they actually bought real things, real goods, right, as opposed to services. So that's why things like car prices, used car prices went up as well. And then if you go back to the cost side of things, what is causing inflation? Oil prices were at $80, so gas prices were already up 50%. That caused more inflation, and then because of that, other effects, maybe not relating to gas, but rent and food also kind of increase. So in terms of how inflation works, right, it's not a uniform thing, right? So it's not like suddenly everything in your life suddenly is like 10% more. It's obviously, it doesn't work that way. There's certain uh, baskets of goods. Let's say you have gas prices, like petrol prices. Then you also have things like goods and also services. You have different buckets of items, maybe like in terms of food, right? Like necessities that react differently. But the overall CPI number in terms of the general inflation and the core inflation, which looks at more around food, will go up, right? So we see this as consumers. We see this when we go shopping, when we buy things for people. We experience it, but we don't really understand inflation because it's an invisible force. You don't really see it, and just it's just that you have this feeling that things go up gradually in price over time, right? So if you shift your focus from, okay, I'm a consumer, to becoming a business, inflation doesn't necessarily mean it's a bad thing for everyone, right? Mostly it's a bad thing if you're a consumer, but like if let's say you are an airline, a business, oil prices is a really bad thing because it's one of the major inputs to your business, and you've already had a hard couple of years because of lack of travel. Suddenly another huge input cost in oil also has gone up, right? So obviously it's a very bad thing where inflation is concerned if you're an airline. But if let's say you produce oil, right, your Shell or Petronas, right, you would make a lot of profits for this year because oil has recovered massively since 2020. So what, if you think about it, uh, what other businesses are kind of like would enjoy a situation where inflation is high, right? So a lot of the times it comes back to basic materials. So if you're a miner, in Australia, if you're BHP or Rio Tinto, you tend to enjoy inflationary environments. If let's say you are a shipping company and supply chain issues really hit the world, suddenly everyone is rushing to charter your vessels, and you are able to charge 2 times, 3 times more than the normal rate. So I'm trying to say that, while inflation is a very bad thing for individuals, if you're a business, it hits you in different ways. So if you're an investor, you have to think about what is the net effect on inflation on your portfolio. If you have companies that enjoy in an inflationary environment more so than, let's say, the airlines of the world, then you can actually reposition your portfolio. It's not all hopeless. Yeah. Okay. So moving on, the result of all this inflation is that rate hikes are definitely on the cards this year. This is quite I won't say it's a technical table, but it's maybe a table that you don't look at every day. But essentially, this tracks all the dates at which the Federal Reserve will meet, and this is the this is the not this the third one here. This is the likelihood of a rate hike. So this one, it means that market participants really think that in March, when the Federal Reserve meets, they will raise rates. So if you look at this same table, maybe just a month ago, this number will be very low. So that means from 1 month to the next month, from December to January, all of a sudden people expect rates to rise in March. Okay, so as you may know, being property owners and people be interested in buying property, or at least you're renting property, maybe you intuitively understand interest rates very well because they determine your borrowing rates, right? So for those of you who are new, essentially interest rates influence your saving and investing decisions. If suddenly the bank gives you now it's about 2%, right, for FDs. If suddenly bank is giving you like 3% on FD, you may want to put more money into FDs because 3% is an attractive risk-free rate for you. So that means there'll be less money outside in the world to invest and to buy things. So that the hope is that overall inflation will go down. As an investor, because your risk-free rate has also increased, you would want more from your other investments, right? If let's say the risk-free rate is very low, say around 1% or 2%, then you have no other alternative than to invest in stocks, because if you put it in cash, you're not getting much at all. And if you include inflation, your real return is maybe even zero. So, you're more incentivized to go out there and invest. But now that the risk-free rate is higher, you might think, hey, I may not want to take so much risks in terms of stocks that I'm buying and things like that. I might actually want to save a bit more and maybe invest more in bonds and things like that. So ultimately, as an investor, you have to understand how rates also impact your portfolio. So if you've had any investments in tech over the last 3 weeks, you would have had a very difficult time. So why is that the case, right? It's mainly because tech is seen as a risky investment, right? A lot of these companies are very, very expensive from a valuation perspective. Some of them don't make money. So the valuations are very high because of that. And the prices have also been very high prior to that. If you've invested in tech, you would be very happy in 2020, mainly because there was a lot of free money out there and interest rates very low. So these companies can go out there and like borrow and expand. And as an investor, also you throw money at exciting futuristic companies like Tesla. And then when rates are signaled to go up, actually it's not as the riskiness of the tech sector that you've invested in or the stocks suddenly don't look as attractive anymore, which is why suddenly you see huge decreases in a lot of these tech names, right? And they have rotated out into other things as well. So that's essentially how rate hikes are a response to very, very high inflation that is at multi-year highs. And as an investor, what this tells you is that you have to reposition your portfolio from something that is maybe you have taken a lot of risk to something that is more inflation proof, right? So commodity players, things like that, tend to do much better in terms of weathering all this inflation and rate hikes. Yeah. So that's the US side of things. I also want to talk about China. So China is a tricky beast, right? Because China is such a huge economic engine and a huge future kind of world leader that for many, many years, almost since the early since the mid 2000s, China has been like an investor's darling since very, very early on. And the reason for that was that when people look at China, they see the fundamentals of the economy doing very well. They see double-digit GDP growth. They see massive urbanization. They see massive middle class wealth creation. So, and then after that, they saw massive unicorns come out of China, right? Because they have this huge market and they're protected from the Western players. So there's a lot to be very attracted to China about. But what I will say is that the way you invest in the China story has to be very, very careful, because while it is an attractive space because of all the demographics, it is also a very different economy to the US, right? It's more authoritarian, it's more communist, is the old terminology, but it's centrally controlled. So the market is not as free as the US. So because of all of that, you cannot just say, yeah, I want to blindly invest in a China index and hope that everything will do well. Maybe if you go back and look at a graph on all this China market, right, you will see that in good years, it will do very, very well. In bad years, it will do very, very terribly. And for the long term, you'll probably be looking at like around mid single digits in terms of returns. So you have to be very, very, very careful about China. So you can see, China has also had a very tough year in terms of headlines and sentiment last year. before all the talk about Evergrande and all these massive property players, there was a lot of bad news around technology. First, China looked at all the huge tech companies and started threatening to regulate them much more heavily, effectively dismantling big companies like Tencent and Alibaba, Meituan, and then it started making rules about where they can list and where they can't list, and then they started making rules about certain sectors not being able to innovate and also progress. Things like private education, like education tech, and also things like gaming. Right? They started controlling it, saying like people can only game for so many hours in a day. So all this is something that you would never see in the US, but it's very common to China because everything comes from the central government and they have a roadmap, and because they want prosperity for all, they need to level the playing field. So they don't want to tolerate massive monopolies who are controlling a lot of people's money and e-commerce and transportation around the country. They want to kind of regulate these players a bit more, break them down so that other smaller competitors can compete, and so that not one entity is more powerful than the central government. So it is very difficult to invest in China because of all these reasons, right? So recently, we've also seen another iteration of this, or rather the result of this as well. So you're seeing a lot of bad headlines about over leveraged property players who cannot pay their bonds. So you see all these headlines, which are not news to you already at this point. It's just that you are feeling the echoes or the reverberations of all this, because there's always a watch on whether these property companies would pay off their bonds or not. Okay, bonds coming up in a week. Can they pay it off? Okay, they managed to pay. Okay, or they default. Okay, so it's like an ongoing drama, right? So our stance at StashAway is actually that while the tech while the tech clampdown has been very, very strong, and it has affected the Chinese internet sector very, very heavily, there's actually still a lot of room for innovation, but it has to be aligned with what the Chinese government wants to do. Okay, so now that the Chinese internet stocks have been beaten down so bad already, we need to see what the Chinese government is in favor of doing. So the first thing that they're in favor of doing is to actually have more semiconductor capacity in China. So they want to rely less on Taiwan and obviously the US, and have more semiconductors built in China. So we think that semiconductor players in China would naturally do well, right? And we also think that China will be at the forefront in terms of things like 5G, 6G, driverless cars, space exploration, all of these things, right? So we are still very much bullish on the Chinese tech sector. It's just that we have to be more selective about where we invest. We cannot just say, oh, I want the internet sector anymore. You need to say also like, oh, you need some semiconductor exposure as well, or maybe like some communications. They are equivalent of, let's say, companies like Google and telecommunication players, right? So all those tech and internet companies should do well. I say should because China is still investing a lot in this space, and they are at the forefront of a lot of innovative technologies. So if you want to be positioned for the long term and you're still bullish on China, this is the way to go. What we're not in favor of is to say, let's look at China and the old economy. So things like property, banks, we are not that excited about those opportunities. Okay, so if you look at the underlying Chinese economy as well, it is actually still relatively strong. Okay, so what this graph is if you look at this 100% line, this is basically GDP. What is the drivers of GDP for 1 year versus another year? So if it's more than 100%, it means that GDP has grown. If it's less, means it has kind of shrank a little bit. So don't worry about the levels of these bars. Worry more about the composition of these bars. So for example, if you see consumption in 2020, it was a really terrible year for consumption because of COVID. In 2021, it basically rebounded, right? So China has this middle class which is very big, and you can see they have been prosperous for a very long time. And you can see that in 2020, that took a huge hit, and that's unsurprising. But ultimately, it is now back, and consumption is healthy again. So I think that is a huge driver of the Chinese economy that has recovered, and it's something that if you are invested in China, you can say, okay, the Chinese individual or consumer is spending, and also they will consume a lot of services. So that ties back into the tech side of things, right? Like they will order more stuff online, they will use their equivalent of Grab to move around. All these things, tie into a healthy consumption pattern. And while the US is looking to increase its rates to curb inflation, China is actually looking to cut its rates. So during COVID, it had to cut its rates quite a bit, because lower rates means that you can stimulate the economy, because more people and businesses have cheaper loans to go out, and they are incentivized to spend and invest as opposed to save. So after being so quiet for so long, they've now cut rates a little bit, probably signals some sort of rate cutting cycle in order for China to be more accommodating to growth. Yeah. So if you look at the Chinese economy overall, you see all these property companies defaulting, and the Chinese government wanting to help more people kind of have this common prosperity. It is cutting rates because it wants to achieve these objectives. It wants to help the property developers, and it also wants people to go out there and spend, and have small businesses expand, and all that. So a rate cut is a positive thing for China, and we think that overall it will help the situation over there. So this actually just happened today. At 10 a.m. today, I saw the news that they actually did cut it. So I think this is hot off the press. So you can see two major economies acting very differently, right? You have the US finally raising rates after so long. They have consumers that had a lot of money, but not enough goods to buy, which is why inflation was so high. And then you have China, which has clamped down very hard on tech, and the property sector is over leveraged, and because of all of this, they are cutting rates. So knowing all of these risks, right, I would say you should invest accordingly and with caution, and not just kind of like think that anything you touch will automatically do very well, because maybe you have some sort of you're excited about the opportunity, right? You should really be very considered when investing as well. So I wanted to kind of end here with a very kind of basic tenet of investing, which is diversification. So it's not something new. So for example, that Dato just now in the ad also had a lot of properties, right? So he's also diversified in terms of where the location of all these properties are. He also has maybe some shop lot, some residential, and all that stuff, right? So diversification is one of the only free lunches in investing that you will have. And that is because no one invests to lose money, but more people lose money in investing than make money, right? Especially if you talk about stock trading, like 60 to 70, or depending on certain markets like FX or cryptocurrency, 80-90% of people lose money, right? So why is this the case, right? It's because people are just not diversified enough. And if you are diversified, you actually get the chance to stay in the game. You lose money, but you don't lose that much. So you still have capital to roll into other opportunities, or other opportunities that do well in certain years and don't do well in certain years. Ultimately, perform, and then the overall trajectory of the portfolio is still up after a few years. So I want to tell this story about diversification with two commodities. One is gold and one is energy. And this is a chart from 2021, all throughout 2021. So if you just look at this chart, you would say like gold has done very terribly because it was very flat, and oil has done really well because it's gone up, 100%. That's such an amazing investment. And if I had any oil counters, maybe, or I have exposure to energy, I would have done very well. So you see the red color circle over here. See, this is a 1-year timeline. But if you just extend the thing to 3 years, which is medium to long-term investing, you would actually see that gold has done better than oil, because gold had a very, very good 2020, a very good 2019, very, very good 2020, and then in 2021 it was flat. So it did 50% over the span of 3 years. Whereas oil actually basically recovered from a terrible 2020, and if you held it for 3 years, you would basically be flat. You would have a few heart attacks along the way and some excitement maybe that you could recover, but if you held it for 3 years, you are still in the same spot. So the point is that even though obviously these two are very different commodities, they are, you can't just say that, oh, this year I definitely want to I know what's going to happen. This year I know that this commodity is going to do well, so I buy this commodity over the other. I think it's worth having these two in your portfolio, because obviously overall you would have gotten somewhere around 20%, right? So this chart also shows that diversified portfolios do better in the long term. Mainly it's because during tough times, diversified portfolios weather the storm, and they don't go down as much as concentrated portfolios. So this black line over here is diversified portfolios, the gray line is concentrated portfolios, and you see they fall less. And because they fall less, they actually get to recover faster, and in the long term, they actually do very well. So here they do very well, and mainly it's because they don't go down as much. So even though it may seem like diversified portfolios are like a bit too safe, and maybe sometimes you feel like you're missing out when some of your friends have invested in rubber gloves and you have not, and they made a lot of money, right? I think if you are not diversified, you don't have a chance to be lucky when certain investments do well, right? Obviously the other side is true as well, right? Like certain stocks go down, certain sectors, certain countries don't do well. But overall, you need to be well balanced enough so that your overall portfolio doesn't go down as much, so that you can recover and then do well over the long term. If you're a short-term trader, then there's a completely different mindset, because then you would have an instinct of how to shift your money around. But if you're a normal investor, long-term is probably the way to go. Okay, so this is a StashAway portfolio. It's an example of a diversified portfolio. You can see that there's different equity sectors, and also some bonds and gold as well. So this is just an example of a balanced portfolio that is relatively well diversified. So I also wanted to show you one thing you can do on top of diversification, which helps you invest for longer, which is essentially look at the long term, right? So diversification helps you invest, obviously, because you don't put all your eggs in one basket, and overall you will do better in the long term. But also, if you actually do invest for the long term, you will see that it helps you recover if you've made any, if the market has gone through tough times, it helps you recover. But also, if you zoom out far enough, you will see that your investments have a very high chance of being positive if you take a long-term horizon. This is a 10-year chart of the S&P 500, and you will see that there's many flashpoints where bad things have happened that have spooked the market, right? You will see the big V shape there, which is obviously COVID, and then you will see smaller dips and recoveries over there because of geopolitical risk, smaller kind of epidemics, things that happen in the industry that really impact the overall market. Things like the BP, Deep Horizon oil spill, bad economic data that spooked and surprised the economy. And then towards the 2020, you will see very familiar concerns, right? Remember I said that inflation is just the current concern. You will see that after Joe Biden was elected, you had the US Capitol. There was a lot of protests there. There was the second wave. There was the Delta. There was Evergrande. Now inflation and Omicron. But if you just zoom out, you will see that the overall S&P has done very well. So this also helps you gain perspective and helps you think about dollar cost averaging if you're looking at the long term. Try not to pick when the market is at the bottom, or try not to say that, oh, the market is at the top, let's sell. I think the easiest way to actually ride the markets is to dollar cost average, or even go so far as to say, if markets go down, I will invest more. Because you're not investing in a single stock, right? You're not investing in just one stock, like let's say AirAsia, or which can rise and fall depending on that one business alone. If you're investing in the entire market, you are more diversified, and the chances of like the whole market going down because of something fundamental like COVID is very, very rare. So just invest for the long term and invest broadly and in a diversified manner. Okay. So I wanted to also acknowledge some of the StashAway investors who have invested with us for many years now. So we've been in this market for 4 years. So apologies for the wall of numbers over here, but I couldn't think of a better way of showing all these returns, and also to illustrate my point that long-term investing is really the way to go. And if you're not investing in StashAway also, this is a good way for you to understand the returns are, right? So here at the top, we have StashAway's portfolios of different risk levels, 6.5 and 36, and everything in between. So 6.5 is the lowest risk, 36% is the highest risk. Just think of this as maybe your potential maximum downside. Okay, so if you're invested in a 10% portfolio, it means your theoretical potential downside is 10%. Okay, so these are quarterly numbers in terms of returns. You can see that there's 12 portfolios to choose from, and what you see here in blue is how they've done in any one full calendar year. So you will see that 2018 was not a particular good year. 2019 was a fantastic year. 2020 was also another decent year. 2021 was an average year. Yeah. So small negative returns, a couple of good years, and then last year was mostly flattish, unless you were in some of the portfolios that you get 6 to 7%, which is maybe not as exciting as 18 or 20%, right? But because of the risks, that's what you get as well. It's never a straight line up, as you saw in the previous chart before. So if you look at this data and you do kind of like a rolling 1.5 year, or even, I would say 1.5 year kind of a period, if you invested any time in this period for a year and a half, your returns would be positive. Yeah. So I would say that a year and a half doesn't seem like a long time, but for a lot of investors it is. So what more when you're talking about 10-year, 5-year, 3-year kind of periods. So in the 4 years that we've been around, we've managed to return cumulatively 12 to 50% returns, but you must always analyze as well. So we've done 2.5 to maximum of, let's say, 13.5% returns. And if you think about the Malaysian market, which is quite flattish, unless you pick single stocks and try and trade your way to doing well, think about the FD rate, which is very, very low, unit trusts, which are very, very high fees, and ultimately your net return is very low. I think these returns are quite decent. So if you look at the long term, actually, it contextualizes a lot of things, and it helps you invest for longer as well. So all I wanted to end with here before going into questions is that if you start investing by going to this mini URL over here, you get to enjoy 50% of our management fees for 6 months. So our management fees is only 0.8% per annum. So if you invest $1,000, the fees per annum is only $8. So there's no minimum to start with. So start with a few hundred ringgit to try us out. And if you're new, you can click on the mini URL over there. And if you're still waiting for your bonus or whatever, you can just take a screenshot and use it later on. This is an evergreen kind of thing. Okay, so I will also need your help, Paul, to share this later as well, with your members. So that's it for my presentation. I'm happy to answer any questions if you have.
No problem. Thank you. Thank you, Ken. Thank you for your very insightful sharing just now. Actually, I just have 2 points as a kind of a wake up call for me. The first one is that China, although China have a lot of the kind of the regulations risk, but after you understand the risk, and then you will, if you look at the opportunity, they still have a lot of opportunity there. So this is something the key points that I learned from you. So the semiconductors, that's the thing that you mentioned. So then the second thing that you mentioned is about the rate hike. Everyone know about the rate hike, and everyone is expecting the rate hike. So that is definitely got some industry who's going to impacted by this rate hike, but also in the meanwhile, there is some industry who's going to benefit from this global policy change. So definitely, this is something that I have learned today. But of course, I think that our audience quite excited right now. So later on, I'm gonna share also thank you for StashAway. It's very kind for you guys. I just offer some to our users and our employee and a discount. So later I'm gonna share the link on our Facebook comment and also on our YouTube channel. So but in the meanwhile, right, again, I'm gonna take 5 minutes for just like do a very quick sharing about our Speak Home's services to our newcomers. So those who are already listen, I don't know how many times that you listen to me, but just just give me 5 minutes. Like just bear with me for 5 minutes. I'm going to explain to our new friends about our Speak Home services. So guys, if you in the meanwhile, you can just type your questions. Later, Ken will answer your questions one by one. So thank you so much, everyone. Okay, I'm going to share my screen right now. Okay, guys, if you can see my screen, can you type 1? Yeah. So okay. So guys, if you haven't heard about Speak Home, let me just use the 6 point very fast. So the first point is, actually we are the free posting website. If you have a house to rent, you can just upload your property, no charges. So if your house is within Klang, very certain area, we're going to arrange a home runner services. We're going to assign someone to help you pick up the key from you and show the house. So number 3, we are going to do a background check for the tenants. After they view your house, they like your house, we will ensure they are they don't have any bad credit scoring. Okay, they have the income to pay up your rent. So this is something that we're going to do. So after the tenants, right, they pass our background check, and we will prepare a digital online signing agreement. So only after they sign the agreement and pay the first month rental, so then we will use the first month rental that the landlord paid to Speak Home to purchase Allianz insurance, and we will help you to do the free rental collection as well. So 1, 2, 3, 4, 5, 6. Okay, you upload a property for free. We show the house for you to potential tenants. We check your tenant's background. We help you to prepare digital signing agreement. We help you to buy an insurance, and we help you to do the free rental collections. As simple as that. So Speak Home, actually, we are the local Malaysia company founded by our CEO, Mr. Wong Wai Ken. He founded this company during 2015. Back then, we call ourselves Speed Rent, and we rebrand in 2019. So now, right, latest on our apps at 550k. Actually, now we already achieved 600k app downloads, and our monthly traffic is about 220, and we have more than 100k of the property listed, and also 600 inquiries, 600k inquiries. I think the numbers is higher lah. So if you check on Speak Home, you Google with all the mainstream media in Malaysia, you will find our brand is showing in all this mainstream media coverage. So we have raised like 70 millions over the past 5 years. Right now, our main investors has included 500 startups, IJM, ex-Groupon employee, now is the Faith co-founders, Mr. Joyano and Joe Chinchao, and also Allianz and Gopi Partners, a regional venture capital fund. So basically, just this number just told you we are really like get supported, and also a lot of the big organization that actually they trust us. So during launching the rebrand day, the launching day of the rebranding, so we have invited the ex Allianz CEO, and also the ex IGM CEO, IGM deputy CEO, and also IGM Land CEO, and also the local government, and also the housing minister Wabi Zuraida to be our guests. So what is the Speak Home so different than the other platforms? So that's these 5 things. We provide better quality tenants, direct communications. Our zero deposit will help you rent our house so much faster. In the exchange, we will provide an insurance coverage. We also provide the viewing management and also free rental collections. So maybe some of landlord they are not really that trust about zero deposit. What have if any accident happen in my house? What gonna to cover us? So the zero deposit actually benefit the landlord as well. So the tenant portfolio, we're gonna to maximize your tenant portfolio. Basically, if anything happens, the insurance will cover your loss, included rental loss, damaging, and also the unpaid utility bills. Your property will always be the first choice, and your house will gonna rent so much faster compared to the traditional way, and 20 times of the property the protections. So maybe this is a little small about the word of these packages. So basically, in Speak Home, our charges is very simple. We have only one charges, which is the insurance packaging from 1 month to 1.5 months monthly rental. So for our ultimate packages, extended plus, we will charge you 1.5 months for the insurance fee. So, but we have 2 features that is Speak Home only offer to the market. The first one we call it overstay cash defender. If the tenants they overstay in your house, didn't pay the rent, we will pay the rent in the meantime. We will apply a court order, and we will absorb all the lawyer fee. And the second thing, we call it on-time rental. We will pay the rent to you until the tenant move out. This is the extended plus package that we offer. So, and also not mentioned that we also have lost rental, and the inconvenience benefit basically is the utility bills lah. And the last one is about the damaging all the furnitures, movable furnitures in the house is all covered under by the Allianz. And if you purchase the extended plus, is up to 42k. So this is the only charges that we Speak Home have. When we finally get you a tenant, then we will pay. Then the insurance will ask you to buy in 1 month, 1 to 1 month to 1.5 month. It depends which package you choose. So it's the last. So right now, Speak Home, we built a community. We call it landlord community. Currently, this Facebook group that we built, we have 6k members, all active members. So we are not like the other groups that you join. Like people all keep on spamming the ads, the property buying ads, the tenants are acquiring ads, different of ads. This is like just purely a community. We want all the Malaysian landlords support each others. So if you have any kind of questions, right, after you join this group, you can just feel free to put up your questions, your query, and we have very helpful members. They're going to answer your questions. So this is the group that you should join if you are the landlord. Association of Landlord Malaysia, or you just take a picture on this QR code. So the last one with Speak Home, we will currently have a lot of the different activity and discount. So I also suggest you to join this Telegram channel. Later, I'm going to share these Telegram channels in our comment sections also. Okay, guys. So yeah, in the Speak Home sharing is just here. So let me check around. Yeah, what kind of questions that? Okay. Okay, Moon Yi, thank you so much, Moon Yi. Thank you for your support. Yeah, we have a very supporting messages from our friends like Jezebel, Wong Moon Yi. Thank you so much, guys. Do you have any kind of questions regarding about the things that Wai Ken that he shared. Yeah, just put up a question in the chat.
Before that,
Yes,
Bunyao, sorry,
correct.
I have a question about
Please,
Speed Home. Do you
please.
also do? Can you find rental for room by room or just the whole
Actually, we
property?
have, but in the room rental, right, this is more on the DIY because our home runner services, right, if you already have a current tenant that will stay in the room, then you want someone to show the house. That's also some technical issue lah. So we need the landlord to involve more lah. But eventually, yes, we do have.
So
You can just upload your room, put it on our platform, and there's someone query on you. Then you need to arrange a time to show with him, or you have communications with your current tenant. Yeah, you just communicate with your current tenant, and just mention, yeah, just find a time, then they can just show the house lah.
just more coordination lah, but overall,
Correct, correct,
lah. Yeah, and
correct. More
also
coordination.
maybe easier if it was the whole property lah, right?
Correct, correct. Easier. The whole property is much more easier lah. But yes, we do have
Interesting.
room. Yeah. Okay. So that's this comments. Okay, from our uh from Facebook. So yeah, is the question is about the ESG compliance issues, right? Actually, is
Hmm.
impacted to Malaysia a lot of the labor intensive industry, lah, such as glove or even yeah, palm oil or the electronic. Yeah. So may I know, sorry, that this user is asking, like, what's your thought on this matter? Should we avoid this labor intensive industry or something?
Yeah, I think it's another risk, right? So it's not avoid,
Mm,
but maybe be aware and invest accordingly. So ESG is a very big issue, and I will tell you why it's particularly a big issue for practical purpose. I think the feel good factor and the reason why we are doing ESG is very
mm,
clear. But I think for a practical reason, a
mm,
lot of legacy industries will now not do as well as they used to, even though
mm,
the 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 the, the factors for their business have improved. Like palm oil has done very well,
mm.
oil also has done very well, but the overall crude palm oil, but overall palm oil index and the oil services index has not done very well, and it's mainly
I
because
see.
of ESG.
Yes.
And why why do why is this the case, right? It's because a lot of foreign fund managers have ESG standards and they have to tick a box. So if you have it, they just have to shed it, right?
Mm,
So it's not like, oh, business not good or whatever. It's just that the share price
mm,
will not be as good
mm.
as opposed to before, because foreign investors have more scrutiny around what they invest in. So it's not because of the fundamental business. It's just there's
They can't
overall,
invest in
right?
this sector. Yeah, moral. Yeah, I see.
Simplistically, there's just less demand for traditional industries like that, right?
I
And
see.
yeah, I think the top glove one where the labor issue is concerned is
Yeah.
also quite political, right? I think that time
Today I
there was
just read the news, right? Supermax, they just lost another, yeah, contract from the Canada's,
I see
healthcare industry. Yeah, this is
uh,
today's news. So
something
this
to
is
know.
some things like the risk lah, kind of related to the audience that they asked. So this is a second question, right? I think, from also Facebook. So can you share your views on the metaverse related investment with us? What kind of the
Ah,
industry will benefit from this metaverse initiative? Yeah, start from Facebook.
yeah. So I would say I won't uh give you a 1 hour talk about crypto lah, because metaverse is related to crypto
Correct.
and crypto is related to metaverse. But I will kind of try and frame it and maybe try and give you a direction on maybe where to bet on the
Yep.
future lah.
Yep.
So basically, there's a big movement called Web3. It's a
Mm,
new label that's been put on anything that is kind of crypto related or blockchain related.
mm,
And and rather than go very deep into all of this, let's just define broadly what are the things that constitute a Web3 business. Okay,
mm,
so a Web3 platform or protocol. So Web3 is usually decentralized, so it's built on a
mm,
blockchain, and there's a lot of property owner rights attached to the things that you will have on Web3. So, for example, in Web2, if I play a Diablo game and I get this magic item, I cannot transport this magic item into another game, and I don't own this thing. But in Web3, I can play a game, and then I can get the magic item, and I can move. In theory, I can move this item or sell this item because I own the thing. So there's a lot more value being shared with the people lah. So all of this is very attractive to existing Web2 businesses like Facebook, because they also want to move into this Web3, and they want to also position themselves to be a Web3 player to I guess to be relevant and to also make their firm more valuable. So if you take Facebook's view of the metaverse, you will have like basically, like, you have to put on your Oculus and you have to live in this avatar like world, and you have all these like experiences that you're able to have, like go to a concert or work or play remotely, have relationships with people that are like all around the world, but you're together in this virtual space. Okay, very cool, right? So all of this sounds very new, sounds very far-fetched, but maybe not too crazy also in the distant future. So how, as an investor, do you play in these things, right? So there's mainly two ways. So if you look at normal stocks that have talked about the metaverse and have made serious inroads in terms of hiring, developing, maybe acquiring a few companies, obviously like Facebook, companies like Square, which now is called Block, Roblox. Some of these companies have kind of like the ability to go into Web3, then maybe you want to buy these stocks. If you're a little bit more adventurous, you can buy crypto-related items, coins like Decentraland, the ticker is MANA, MANA, or Sandbox, SAND, or things like Axie Infinity, like you can look at these things. But I would say they're not like a share. So buying a token, buying a crypto is not like a share. So you have to just kind of hope that it accrues value and that it becomes more valuable, right? Because it's not so obvious that I buy this, I own a share of this company, and therefore it will be very valuable, right? So there's also more direct things, like if you can go inside Decentraland and you buy a plot of land, maybe Snoop Dogg will build something close to you and then suddenly become neighbors with Snoop Dogg, or like the Samsung or Apple flagship store, then suddenly your land will be very, very valuable, right? But also there's also more. I would also say that it's not as easy as it sounds. I've looked at it, but I haven't owned anything on that stuff. I don't own any of the things I've mentioned, Web2 or Web3. But basically, I've shown you all the options from most safe to more risky. So you buy existing Web2 companies, you can buy tokens, or you can buy like digital land and stuff like that, right? Yeah. So since you asked, I have to say, right? It's a very long response.
No, I just like, because I kind of funny. It's like in Korea, right? Right now they even have a metaverse ETF. They invest in a certain, and then like 2 months ago they started this. Like a couple of months ago they started this kind of the ETF, and I just like kind of curious. Yeah, the audience that who asked, and then I feel like this is something that is it there's another bubbles just waiting, or it will going to be like internet, because same as when the internet just started, everyone is not really trusted. Is it that internet's going to get, and then after 10 years this is a .com bubble, then after the bubble, then right now it's like really the e-commerce, everything kick in. So so just want to share your thoughts about on this. Just want to learn something from you. Okay, so again, that is another that is a friend from YouTube. He asking about StashAway. Is it a withdrawal guarantee? How fast the withdrawal process?
Yeah, whatever you have in the app, you can withdraw. In that sense, it's guaranteed. It's like any other unit trust, right? Like if you have 10,000 ringgit and it gone up to 15,000 and you want to take it out, of course you will get the whole 15,000 back. You don't need to worry about that at all. The withdrawal process takes about 3 to 4 days. I'll tell you why. It's because your money is invested in the US. So when we when we convert when you sell the time during the day in Malaysia, at night we will execute the order because that's when the markets open in the US. Takes 1 day for the money to be sent back to Malaysia, and then takes another day for us to send it back to you. So it does take a few days, but with some advanced planning and all that, you should be fine. It's relatively liquid.
Yeah. Okay, does here have a testimonial? Yes, I do put my money in StashAway, and I do withdraw yeah, from StashAway. So everything is just like the normal the unit trust. In fact, I think it's like faster than the if you invest in the local unit trust. If you want to withdraw and then the process everything you can just done by download the StashAway apps. Yeah, very smooth. So yeah, don't worry. Yeah, Mr. Azmi. So as me, yeah. So guys, do you have any other questions? Let me check on our Facebook. This is on audience. Yeah, Miss Wong. So Miss Wong. So if you have any regarding speed home services query, right? I will suggest you just PM our Facebook. I'll pick it up there, and I will ensure tomorrow. During the working days, right? I'll pass it to our operation staff to help you to solve this issue. Thank you for the query. So, guys, do you have any other questions? So, seems like today our friends is a bit, is a bit shy. So, okay, then, and why can't I have a last question
Mm,
for mine personally? So, I saw the bank. Actually, the bank industry, right, is quite bullish,
mm.
okay, compared to the other sectors. So will they continue this performance? Because bank they will done better the interest rate hike circle, right?
Uh, generally, generally yes.
Hmm.
Then they actually have more net interest margin.
Correct.
I will say, uh, I will say that depends. You're looking at Malaysia. If you're looking at Malaysia, then
Hmm.
it's more of a, dividend play as well. So
Yeah.
I wouldn't rely on it so much for a lot of capital gains. So it's safe. It's fine. Not very exciting, but like
Hmm.
for dividends is okay lah. So
Hmm.
rising rate environments, you're right, but also um, the risks are there because if you raise rates for certain uh, parties, then actually
Yeah.
your lending activity overall will decrease a little bit, right? So we'll
Yeah.
see when Malaysia raises its rates. Not right now. There's no talk about that. But if they do, let's say from 1.75 to like let's just say lah, right,
Hmm.
2.5 in many
Yeah.
in certain 2-3 steps, then there'll
Yeah.
be less people overall that borrow, and
Mm-hmm.
overall net
Yeah.
net
Loan
is
growth.
whether they loan book whether the loan book and the value of the loan book grows or not. So you need to look at that net
Yeah.
effect.
Yeah. Yeah. Okay. So that is Mr. Lim. He just type a sentence say like why return is not so promising. Are you mentioned about StashAway return not so promising, or you say the bank return is not promising? Can you just
I I
elaborate
can
a bit?
assume.
Yeah.
Let me assume that it's StashAway lah because this year was quite a flat year for us. I'll say mostly it was flat because of
Mm-hmm.
our investments in China. So
Yep.
um, let me pull up the return. So
Yep.
overall, our portfolios was either flat or
Mm.
up 7%. So depending on
Mm.
where you are, it may be not so promising. Especially in third quarter August, there was a big drop in terms of the China equities. So if you held any portfolio which have Chinese equities, your portfolio would have done not so good. But I would say StashAway is more of a long term thing. Like I said, the year before we've done amazing returns. The year before also had very good returns.
Mm.
So on average, from launch, we still do 3 to 13%, which is decent.
Mm.
And also, I will say that the returns are very personal to you. So if
Yep.
let's say you come in at a time where, let's say in June or July, and then suddenly August you drop, right? Then you need to like recover back, right? And if someone come in just in August at the bottom, ngam ngam, then they will actually
Mm.
feel like, oh, I don't see the big deal. Maybe it's a bit slow,
Mm.
but I don't see the big deal.
Mm.
Um, and also depends on how you deposit. If you deposit like dollar cost average
Mm.
versus coming in at the top and then it dropped and then you are stuck there, you didn't invest some more, it's very unlikely that your returns will be very good lah. So the best way to utilize our platform is to invest steadily. Maybe 1 month, every month you put certain amount, and then hold for a long term because like I said, any kind of year and a half period, you would have not lost money, right? As long as if you look at the past historic performance, right? Not to say guarantee you will make money, but if you just look at previous performance, you just hold a year and a half, you will make money. So it just takes a bit of patience and a bit of planning, right? Long term perspective. So that's the
Yep.
name of the game.
Okay. Okay. Noted. So yeah, actually, it's just like for StashAway investments, right? Like you always say is like you show the portfolio and also the what not portfolio, sorry, you show the track record, and mostly it's like in the long term, like a long term investment, like 3 to 5 years, then you will see that is you will see the reward. But if you like in a very short term wise, then maybe that is like flat lah for the last year performance. Mm. So yeah, so I think yes, today's I think it's almost 9:40 actually. Today's we are aim to finish our shows at 9:30. Thank you for Waikin. So I think almost we come to the day end. So Waikin, do you have any last conclusions or last sentence that you want to share with our audience?
Yeah, sure. So, thanks again for inviting me to come on the show. I'm always happy to come back. And every time I come
Mm-hmm.
back, I talk about new things, which obviously show you that investing is an ongoing kind of learning process.
Yep.
So, we have also portfolios that are more future looking. They are called thematic portfolios that are invested in tech stocks and also healthcare innovation stocks. So, if you have a view that all these technologies will change society and be very valuable moving forward, you
Mm-hmm.
can have a look at those portfolios. They are a little bit more risky. So if you're a beginner, maybe you just study it. But if you're
Mm-hmm.
kind of like bored already of all your investments and you're looking for something new, do check out
Mm-hmm.
our thematic portfolios. And obviously, do yourself a favor. And if you do choose to use us, use the promo as well.
Yep. Just feel free to go to our StashAway website and to have a look on this. The things that Waikin just explained. So guys, that is a link that I already share on our comment on our YouTube and also our Facebook comment sections. Later on, you can just check on it, and after if you sign up via this link, you will get a special offer from StashAway. Yep. I think today I just have a last call. Is last reminder. Thank you guys for joining. Don't forget to sign up our Landlord Association of Malaysia, and also currently with Speak Home. If you are the landlord that will refer our services to your friends that never registered for Speak Home before, you will get rewarded by 200 ringgit for every done successful deal. So guys, what you can do is just sign up as Speed Home users, and then you share the link to your friends that who want to rent out a house or have a house to rent. You will automatically gain 200 ringgit when they successfully get a tenant or rent out their house. So yeah, so I think I want to thank you, Waikin, StashAway Country Manager, came to our platform again and share with us that is the main factors that we should understand, and also the risks that we know, so that we can make our right decisions by ourselves. Thank you so much, Joaquin, and hope everyone have a great night and have a good rest, guys. Bye bye. See you.